Hi, good afternoon. You're watching Closing Trades on ET now. Well, the market is holding on to decent amount of gains. 26,110 is where we are at, the frontline index. Then Bank Nifty is up 100 points. Yes, it's underperforming the frontline index, but can't complain much. There are stocks like PNB, SBI, IndusInd Bank, Bank of Baroda, which are powering ahead. The clear outperformer today within segments is auto. That one is doing very well for itself. In fact, Nifty Auto Index has hit a fresh record high. You have Bajaj Auto surpassing the market capitalization of 3.5 lakh crore, and that big bull run coming in as far as M&M is concerned, or rather, I beg your pardon, Maruti is concerned, because that stock is also doing quite well for itself. M&M, yes, is sitting at record high levels, but the bulk of the move today is actually coming in from Maruti Suzuki. That expectation of some sort of positive policy action in Karnataka is giving the fillip to that one, and that's the reason of that big outperformance. Remember when that UPI hybrid policy had come, that time the stock had run up, and this would be second instance of a similar fashion, so that stock is hopeful of that run up. What's not doing well is PB Fintech, clearly under the weather, 7% cut coming in with that foray into the hospital space. Crompton, wherein the channel checks have been a bit somber, how the Onam sales haven't really lived up to expectation, and overall the demand has slowed down in the last few months and weeks, and that's the reason that stock is on the back foot. But Aisha, if you look at the global screen as well, it's pretty mixed, it's pretty sideways for now.
Oh yeah, it is. After hitting those new highs, which has been the case for our markets as well. And now, by the way, we are at that 26,100 mark on the index. The global screen as well is largely consolidating. At least that was the case with the US markets and Asia as well, though there were some standout cases. Japan, for instance, pulled up a good 1,000 points. The Nikkei, that is, was a solid 3% move. Hong Kong as well was on a tizzy, about an 800 move there, point move there. But look at the European markets. They are not somber by any means. Across the board, you are seeing gains of about almost 1.5% on a FTSE MIB, which is scaling higher by nearly about 500 points right now. It's almost a 250-point move coming in for the DAX, no less. And the CAC and FTSE as well are well in the green as we speak right now. Not just that, I must add the US futures as well. After 2 days of a sideways move, they've sprung up, and how you've got the Nasdaq futures scaling higher by 270 points. So that's a huge move that the futures itself are indicating, and maybe part of that positivity could very well rub off on us as well. That said, talk about individual movers, and for us it's really Maruti, Tata Motors all the way, a 5% notch up in Maruti, Tata Motors holding up nearly 3%, M&M higher by 2.5%. And Maruti, of course, reports indicating that Karnataka is mulling that new EV policy for the next 5 years, and they may be exempting electric and hybrid cars from a road tax. So that really props up the likes of Tata Motors as well as Maruti, both given the pipeline that they have of both EV as well as hybrid cars. Vedanta, of course, in the otherwise metal bull run, they've also been, up and about. The board is now considering a fourth interim dividend for the year. That stock looking good. And then Trend, wherein Citi has not just initiated a buy, but now they've put a very lofty price target, that of 92.50 on Trend. So that is one stock also which has been going very steady throughout. But Kunal, hi afternoon. Just fingers crossed. Hopefully the global optimism should rub off on us. We're already at 26,100 though.
Yeah, 26,100 expiry day, expiry week, everything positive for the markets. Sector churn is also played up quite well for the indices. I think, after just about a couple of days of pause, Bank Nifty is trying to come back again. 11th consecutive day where the Bank Nifty has respected the previous lows. So which means we are looking at a pattern of higher lows for the Bank Nifty for the 11th consecutive day. The Nifty Metal Index, that was an index which yesterday took a bit of a profit booking, but I think today we are seeing a very strong bounce back, and many of the metal counters are looking quite charged up. Auto stocks making a very strong comeback. So I think it's a very classical kind of a sector play where we are looking at the index moving up higher, chugging along, and many of the other sectors trying to play a rotation as well as participation quite well. So all in all, bullish on the indices. The next set of targets, as we were discussing I think yesterday, is closer to 26,500 to 26,700 mark for the Nifty.
Okay, even 26,700 on the cards, and last 30 minutes of the trading session will do most of the magic there. But the government is considering allowing more PSU NBFCs to issue capital gains bonds under Section 54EC of the Income Tax Act. That's the latest that my colleague Prakash is picking up, and this is of course for renewable sector financing. Prakash, tell us the details. At what stage is this proposal, and what's the expectation out of it?
Yes, we are learning from our sources that the government may include some more NBFCs in the list of companies that can issue capital gain bonds under IT Act. We are given to understand that some more PSU NBFCs are likely to be included in the list of companies that can raise funds through capital gain bonds. A very significant development coming in, as sources are informing that the Ministry of New and Renewable Energy may approach Ministry of Finance to include NBFCs primarily operating in renewable space. A very significant development coming in. In fact, IREDA has requested ministry to allow issuing capital gain bonds covered under Section 54 EC of the Income Tax Act. NBFCs such as REC and PFC are already issuing capital gain bonds. Therefore, some other companies have also approached Ministry of New and Renewable Energy to approach Ministry of Finance on this issue. Along with that, sources are also informing that the industry has also recommended government to launch bonds dedicated to the renewable energy sector. In fact, industry wants green bonds to attract such green bonds to attract no interest or 0.1% of interest to meet a funding demand. MNRE is likely to approach Ministry of Finance to meet financing requirements of the renewable energy sector, which is expected to draw investment of rupees 33 lakhs crore in next 5-6 years. Therefore, all these efforts are being made, and approx 12 lakh crore investment likely to be drawn from NBFCs in next 5-6 years.
Okay, that's quite an important news flow, or rather news break by my colleague. The fact that the government is considering allowing more and more PSU and BFCs to issue capital gains bonds under Section 54E of the Income Tax Act, and sources are now telling us that the renewable sector's financing needs could actually push the MNRE to seek approvals from the Finance Ministry and include green focus NBFCs like IREDA. That stock higher by 2%. But let's address another bit of news, and we've been seeing and hearing as well about the kind of customer complaints that are happening against Ola. So let's understand all of that, and before we do that, let's take it across to Ajay Bagga, shall we? Okay, now we'll go across to our chartist and try and understand first the market setup, and then of course we'll have the Ola Electric management as well join in. But Naresh, any sector-specific trend that you're picking up? Today it really seems to be all about autos.
So NBFC as a space has been looking interesting. We've seen Shriram Finance do well. Now we are seeing momentum come back into L&T Finance. Then there is M&M Fin, which is breaking out right now. There is AB Capital, which is seeing some price action. So NBFC as a space looks pretty interesting, the whole basket.
Looks interesting. Thanks, Naresh, for that. A quick break, and when we'll be back, we'll be perhaps discussing what Aisha was talking about, all those service requests mounting at Ola Electric.
Back with the closing trades right here on ET Now. Seems like the global buoyancy is definitely rubbing off on our markets. We're at the day's highs and now clocking on to 26,200 really in trade. Maruti holding up 5%, M&M higher by 3%, Tata Motors almost notching that 3% gain. Metals, of course, are contributing a fair bit. Tata Steel, Hindalco, JSW Steel, they're all looking pretty good. And so is Bajaj Autos. So auto, metal, they are the big theme. And since we're talking about autos, let's try and understand really what's going on with Ola and the kind of service complaints that one has been hearing about, talking about, and has been flooded all over social media as well. Harish Abhinandan, the CFO at Ola Electric, joins us right now to exactly break the myth for us. Harish, hi, afternoon, good to have you on ET Now. Just wanted to understand what really is the issue. I mean, we understand that customer complaints have now reached 80,000 in a month.
I think that number there is, obviously grossly amplified. But coming back to the, thanks for having me on the show. And the fact that today we have launched the new partner scheme, which takes the EV revolution to the next level in our strategy towards end ICE age. So that's one very significant initiative by the group today. And coming to your point on the complaints, the fact is that we have continued to expand our service network. We are currently at a little under 600, where we're ramping it up to 1,000. So there's a continued investment in the service area by us. So that's a continued process for us. And all these issues are being addressed as we speak.
Do you think that, the backlog can be covered with the new steps that you're taking?
Absolutely. I think what we have structurally looked at service a very different view and then handle the case. The entire backlog, etc., and the backlog is again a bit of a amplified data point, but the entire service investment is there, and you will actually see it in how these things evolve in the next very near future, next few weeks itself.
So we are waiting for that ramp up because there are those concerns that even a lot of brokerages like HSBC, etc., have flagged with respect to what's happening with respect to the service request mounting and the overwhelmed situation of a lot of your customers as well. But shifting focus to the market share as well, because there as well there has been a loss from over 40% which was there in the first half of the year. It's dipped to around 31% now in the month of August and around 29% in September. What are you doing to maintain your moat, maintain your market share as far as Ola is concerned?
So I think I would not, market share is an outcome of many factors. I think we are committed to our strategy of our EV first approach, a tech first approach. And we have continued to kind of announce product. You have seen our August 15th announcement. Our strategy remains absolutely on track. Our execution remains on track, whether it is on the two-wheeler side or on the cell side. We have a slew of launches coming up in terms of the entire motorcycle range. And in that direction, we are also, as we expand our front end, that's been key areas for a continued investment for us. And if you also see the recent Bernstein report, which highlights our clear margin advantage consequent to our tech investments and vertical integration investments. So between some of the other incumbent players and us. So that our path on our strategy remains unhindered.
Okay, point taken. So that's what you're doing. But given the fact that a lot of other companies are also coming out with these fresh launches, I understand your focus is on the absolute volumes, but is there a market share in mind that you'd want to target, or let's say a monthly figure of sales that you'd want to hit on a consistent basis?
It's every auto, we always have internal numbers and internal targets to go after, but that's an internal matter. And it's not about the market share. For us, it's all about getting the right value product out there from a consumer perspective. And that's what we have always focused on, the best product to the consumer at the best possible price. And that's been our strategy of growth right through.
Yes, internal matter indeed, but definitely of interest to the investors and the other stakeholders. That's why it's a job to push that question a bit. But just trying to understand, a lot of states are looking at coming up with some new policies to, push the manufacturing as well as the adoption as far as EV is concerned. We saw, of course, in the four-wheeler segment in hybrid in UP, there are talks of something happening in Karnataka as well. What do you make of this policy action which is happening?
See, the government has been extremely supportive of the EV ecosystem, right? The various states were very supportive. The center has been supportive. There has been multiple schemes, and the coming PM E-Drive scheme, which is expected to launch on October 1st. That's again a good flip to the industry as a whole. And in that direction, we continue to invest. In that, if you see our announcement today, 625 new network partners on our network as our touch points with the customers, both across sales and service, going up to 1,000 by end of this year, going up to 10,000 by end of next year. So there is our momentum on business is on track. Our business design is as robust as ever and on track in this direction.
Harish, let's clear the air. You said the backlog of complaints is not 80,000. What is the count then?
So I won't be able to give you an exact metric on that because that is obviously continuously, as we track it daily, and it's improving continuously as we speak. We have invested, and just to again maybe repeat myself, we are continuing to invest in service. That is a focus area and will be a focus area to ensure that our customers do get the best service on time. While we have seen a bit of an increase over the last few quarters, but that's currently well under paths to bring it under control.
Is there a consistency in the complaints? I mean, are these all battery related or other manufacturing parts? Why is it that you're getting these bulk complaints?
See, the customers' awareness of also EV is significantly, kind of going up as they speak. and their understanding of the product, the understanding and use of the product is continuing to get better and better. And we treat this as a normal course of business for us. And if a customer has an issue, we have to address it ASAP. And that's been our motto and focus.
Okay, yes, that definitely adoption and education is something that needs to be ramped up. But what's your, scale up expectation as far as your motorcycle is concerned and the three-wheeler which was in the pipeline?
So the motorcycle, you have seen our announcements, which we did on August 15th. That was our product day, and these are very, in my view, very revolutionary products out there. As we have seen how we have transformed the EV industry from a scooter landscape perspective. Going back 3 years, there was hardly any EV scooters out there, and today EV is mainstream in scooters, and that's what we're going to do in motorcycles. Motorcycles are, a larger chunk of the two-wheeler markets actually. So we will play a significant role in driving EV penetration and our end ICE strategy in the motorcycle segment also.
But there also the competition seems to be heating up, and it's understandable given this is one of this focus area. That in-house battery manufacturing, battery cell manufacturing that you were putting up as well. Could you talk to me about the roadmap for that? What's the target, let's say 12 to 18 months out on that one?
So as we already, battery, our project is well underway. We have completed the 1.4 gigawatt hour capacity. That capacity is already there. It's under trial production as we speak. And we are on track to complete to 5 gigawatt hours. It's already, part of our filings with the exchange and during the IPO process also. So we are on track to hit the 5 gigawatt hour cumulative capacity thresholds, and then going up to 20 in accordance with the PLI scheme, which we have been the awardees of, the largest PLI scheme in the ECC scheme, in the cell scheme. So we're on track for the project as we speak.
The other thing I also wanted to talk about is, Harish, what's been the response to the Roadster series bikes that you launched just about a month back?
If I look at the engagement at different parameters, it's been extremely exciting. I think people are waiting for the product. Today, there are hardly any options for anybody who wants to buy an electric motorcycle. So we have seen pretty excitement on the communities, the customer touch points, and our connects with the customer. So, but we haven't yet officially launched. We have launched, but not yet officially started bookings, etc., which we will in the due course of time, usually pretty soon. And as per the schedule Bhavish announced in his August 15th announcements, so we're on track to hit those timelines.
And any special, events lined around the festive season, in the sense, any special scheme, discounts, anything interesting coming in for the customers that one should watch out for?
Can't disclose the product launch strategy yet now. Let the marketing guys do have some very pleasant surprises for the customers.
Okay, on that note, we'll let you go. Thanks so much for making time and speaking with us. That's a clarification coming in from the management. 80,000 service requests seems to be an overstated number. They are quite hopeful and enthused about the kind of response that they've been getting for their motorcycle and ramping up as per the internal targets on that one. Time now to welcome on board Ajay Baga to talk to us about the rest of the market fundamentals as well. And the market fundamentals are looking strong indeed, with that 26,200 mark being scaled at the moment. We should pull up the Nifty, and the kind of up move it has seen in the last few minutes as well. There's a further uptick happening as far as Nifty is concerned, and that 3 p.m. move is happening maybe 8 to 10 minutes prior itself. Ajay, what do you make of the momentum of the market? There's no stopping it at all.
Yeah, flows are very strong, and we see that domestic flows are absorbing even the little FI selling that is still coming through. We are seeing that absorption happening. So the domestic flows, I would say, is the first factor. And then you add on, the global cues are quite benign now. We are in a strong rate cutting cycle. The Swiss central bank also cut rates today. So globally, we are seeing monetary stimulus coming into the economies. There is some softening globally, but India is performing very well on the macro. The balance sheets are very clean for corporates. Banks have the ability to lend. So we are sitting on a good place in terms of macro, in terms of corporate earnings strength, in terms of banks' balance sheets being clean. And on top of that, domestic flows are coming in. So we are, comparable in terms of flows to a US of the 1980s, when Ronald Reagan brought in 401k accounts, or China of the early 2000s. That's the kind of scheme that India is seeing right now, and that's lending a lot of strength to this market rally.
So Ajay, what's the call on the market right now? Anything that you're buying, recommending to do so, or anything that's looking interesting and you're keeping on your radar for whenever the market dips?
Yeah, I think the two big trends, Aisha, globally, and they're coming into India as well. One is artificial intelligence becoming pervasive in everything. Second is the renewables. So everything linked to these, whatever you can find in India, that will do well. So that's the global touch point. And in terms of domestic, I think the next 1 year story is the recovery in the rural demand. That is coming through very strongly. We know the capex, we know the public infrastructure build out. The impact of that, you're seeing 20% better taxes year on year. All those benefits of the infrastructure build out are coming through. The railways, defense stocks already ran up, and they've also seen a mild correction. Now, what is turning is the rural demand. So, anything connected to the rural economy, this is a good time to load on to that. Today, I was surprised with the passenger vehicle moves. I was not, frankly, expecting that. And we'll have to wait and watch, because there's a huge inventory in the higher end cars sitting with dealers. Nearly something like 70,000 crores is the automobile inventory. Now, that is part of the festive season also. The companies do tend to overproduce so that the dealers have enough stock. But we'll have to wait and watch how the numbers come through. But the two-wheelers are doing very well, and that's linked to the rural economy. I'm more bullish on the two-wheelers than the PVs. But if like Karnataka government came out, if other state governments become competitive, UP government already has a policy, Maharashtra has a policy in place, they have to extend it. So if the big states start giving these kind of incentives to the passenger vehicle makers, then you will see the automobile passenger vehicle segment also do well. Otherwise, I'm betting more on the two wheelers because of the rural demand coming back.
Oh, well, yes, and it does look like that policy push is coming, or at least in the works, has been reported by a lot of pink papers as well today. So just watching out for that as well. That's about the auto sector, the two-wheeler and the four-wheelers, and how it's poised for growth from here on. But on the losing side, it's Crompton Greaves, which is down, and Kalyan Jewellers is also coming under pressure. Ajay, whatever channel checks that we have been hearing about, reading about, or anecdotally as well, is it pointing to a bit of a softness of the in this festive season?
There is softness. July and August numbers will not look too good. But what is happening, if you look at the top-down view, you look at the trade deficit, the way it came at $29 billion, and the biggest boost to that trade deficit was from gold imports. So we are sitting at the cusp of 35 lakh weddings in November and December. You will see retail and jewelers doing very well. So I'm not very phased out by what the numbers will come for July, August. I think as the festive season gains traction, next week as Navratri start, and then the wedding season takes off by end October, you're going to see retailers, high-end retail, as well as the jewelers do well. They have been building up a lot of inventory in anticipation. Stocks have run up as well. But as we saw today with a foreign brokerage talking about a domestic retail company, there is still scope for further re-rating. And that consumption and those segments, the affluent and above segments, is very strong. Maybe the mass affluent has not caught up. And there again, as the rural demand picks up, you will see those coming through. But the affluent and the premium segments are doing very well. And you will see that correlation with the wedding season coming through, be it for the retailers or for the jewelers.
Right, okay, Ajay, stay with us. Lots more to discuss. We're going to take a very quick break, come right back with you. But here's the two e-commerce giants who are gearing up for the Dhamaka festive season now. Amazon India as well as Flipkart are all launching their Great Indian Festive sales. So let's get in a pulse from what the managements have to say.
Perspective is to focus on things that don't change with time. And we focus on what matters most to our customers. And we believe that our customers deeply care about a vast selection which is available to them conveniently, reliably, and fast, and at prices offered by our sellers which are attractive to them. So, like every year, our endeavor is going to make sure that we are able to offer the vastest selection at the fastest possible speeds.
This time we have a unique feature where people can come in and lock in the favorite deals which they're looking for, and the product gets reserved for them to buy during the Big Billion Day. And this particular feature is actually seeing very, very good traction across fashion and the beauty and home categories. Every few hours, people can expect some value driver. We have different types of frenzy deals which are coming up. Like TikTok deals and so on. We also have personalized coupon this time. If you look at the Big Billion Days, I think over the years it's become the start of the festive shopping season for us, right? And for the country.
Welcome back. Well, the broader markets have succumbed to pressure. They are in the red, but it is the Nifty which is actually taking a breath away with the kind of move that it is witnessing. 26,230 right now, I think at the highest point of the trading session. So that 3 p.m. move really taking place in the last 15 minutes or so. It's Maruti, Grasim, Tata Motors, M&M. So autos clearly chugging along very, very nicely. And they are the ones which are sitting at record high levels, at least a lot of consequence, as well as the entire Nifty auto at the moment. In terms of the contributors, M&M is contributing the most, followed by Maruti and Tata Motors, but ICICI Bank and ITC is also not far behind. On the losing side, ONGC, L&T, Cipla, NTPC, these are the spoil sports right now, but definitely great traction in the market right now. We do have Ajay Bagga staying on with us. Naresh as well as Kunal are with us, and Sandeep Sabharwal also joins us on the show. Sandeep, to begin with, this massive rally which is underway in auto, completely undoes what we were saying a couple of weeks ago, the inventory build-up and the fact that there was a lot of discounting and all of those clamors which were coming through. What do you make of the auto sector right now?
Anisha, so when we were discussing the industry at that time, so the two-wheeler stocks were running up and the four-wheelers were correcting. And what I had said was that in anticipation of festival demand, it's likely that the four-wheelers will also see some sort of revival going forward. Now the challenge, or let's say, now it's a question of delivery. Now these companies have to deliver on the festival season sales, and I think that's the challenge. So if festival season sales pick up, then I think these stocks could sustain. If not, then I think they could give up the gains. So within these companies also, if you look at a company like M&M, so they could actually benefit from farm sector revival, and the tractor segment, etc., could do better, and that's always been a high margin business for them. And this has been one company which is largely underappreciated, because you look at the kind of models or vehicles they launch and the numbers which become successful and the kind of waiting list which build up. No other auto company in India is able to do that on the four-wheeler side. But still, in terms of valuation, it tends to trade lower than other auto companies. So I think that some catch-up is happening out there.
Yeah, absolutely. And talking about catch-up, I think the kind of move that you're seeing in some of the Nifty entrants, that's also been remarkable. In fact, Samit is here to tell us all about the likes of Trent and Bharat Electronics, which are all set to replace Divi's and LTI Mindtree in the index.
Well, the NSE index changes will be implemented from September 30th, that is Monday. But major inflows regarding this is expected to happen on September 27th. Now, a couple of stocks that are getting that are the new entry in the Nifty 50 index, that is Trent and BL, and both these stocks will see an inflow of anywhere between 340 to 470 million US dollars on the back of getting included in the Nifty 50 index. While two stocks that is getting out, that is Divi's Lab and LTI Mindtree, could see an outflow of anywhere between 150 to 190 million US dollars. Now, there are a host of changes when it comes to the Nifty Next 50. 5 stocks that are getting included are BHEL, JSW Energy, Macrotech, NHPC and Union Bank, and the inflows in these stocks could be anywhere between 30 to 50 million US dollars, while 5 stocks that are moving out of the index are Colgate, SRF, Marico, SBI Card and Berger Paints, and these stocks could see an outflow of anywhere between 20 to 57 million US dollars. Now, one change when it comes to the Nifty Bank Index, Canara Bank is coming in while Bandhan Bank is moving out. Canara Bank could see an inflow of close to 44 million US dollars, while Bandhan Bank could see an outflow of close to 37 million US dollars. Now, apart from this, there are some changes when it comes to the CPSE index as well. In that, NTPC's weight is expected to come down, because of which there could be an outflow of close to 132 million US dollars, while 3 stocks which could see an increase in the weightage are BEL, Coal India and ONGC, and these 3 stocks could see an additional inflow of close to 29 to 30 million US dollars. So keep an eye out for these stocks in trade. September 27th is the date when flows are expected to come in on the back of changes in weightage or changes in the index, NSE index.
Okay, we will watch out for the new entrants as well as the flow picture coming in. And Ajay, just before we let you go, a quick question on the power sector, because this new electricity plan has us excited with the 9 lakh crore capex coming in. Do you think this was priced in already, or do you expect further fireworks for the power stocks?
It's largely priced in. Every 10 days we get this REC number of 2030. They will be at X lakh crores and renewables will be this high. So largely priced in already. But power, again, it dovetails into the artificial intelligence, data centers, power demand picking up, and the renewable story as well. So the shovels and the picks providers as well as the financiers will tend to do well, but it's a well-known story. And just one more point I would like to add to what my friend Sandeep was mentioning. And again, as I mentioned earlier, I was surprised with the run-up in the passenger vehicle numbers given the inventory build-outs. If you look at top-down, the diesel consumption in India is down 2.5% year on year. The SUVs are getting huge discounts. They are not selling. The MUVs are selling more. So the smaller cars, which are petrol driven or hybrids, of course, are getting subsidies. They are selling. But the diesel cars are finding it difficult. So I'm not very sure on the passenger vehicles. I would totally agree with Sandeep's thesis on that. And maybe the two-wheelers and the rural connected autos will do much better.
Rajay, so good having you on the show and join in with your thoughts. But Sandeep, I want to talk about Trent. This morning, you've got a city initiation. Of course, the stock will make its way into the index, and we've seen the kind of inflows that have happened. But now they've put a lofty target of 92.50 on Trent.
So whenever you do such a late initiation, in order to justify a buy recommendation, you have to give a target price at least 15-20% higher. So I think it germinates from that. So the key is that Trent has been surprising all of us with the kind of profit numbers they've been generating quarter on quarter. And if this surprise continues the way they've been surprising, then this target might also be possible. But as some of the business models get more established, growing at that pace could be challenging. So I think it will be interesting to watch how they deliver, because on pure valuations, even this price of 7,800 is very, very steep.
The price is steep indeed, but it's just that there are a lot of participants who still love that stock pretty much. Just taking stock of the underperformance coming in from the broader markets. And Naresh, what do you make of it? Nifty is making fresh records high, 26,200 scale comfortably, but there is no sort of reviving the mid cap and the small cap indices today.
See, over the last 1.5 year, it has been mid cap and small caps outperforming the Nifty, Bank Nifty by a very big margin. So a few days, few weeks where Nifty and Bank Nifty take a lead is pretty normal. And also today is an expiry day. There are some flows, rejects, etc., which continues. So that could be one of the reasons the flows are more centered towards the large caps. But overall, it's a good thing to have the benchmark indices do well and the small caps to take a little bit of a pause or get more selective. And that is the structure right now. And it's been 1.5 years of small cap. So if we get a 1.5 week for Nifty, it's still a normal time.
Take coming in as far as the underperformance of broader market is concerned. But Sandeep, I wanted your take regarding what should be the right portfolio allocation at the moment. Because on one hand, of course, you have equities which are looking a bit toppish. Gold has run up more than Nifty this year already. Bonds is, of course, is also very precariously placed with the entire rate cycle turning. Within the portfolio allocation level, what would be the efficient allocation as per you?
So I think portfolio allocation varies from person to person and the age group which they are in, etc. So it's very tough to generalize. But it's been my view that for people who are not in, let's say, who don't stay in the US and their currency is the reserve currency, gold has always been a very good investment, and it's been something which has been negated by many people. But it's today one of the biggest sources of wealth for Indians. As per current calculations which I did on 29,000 tons of gold which Indians hold, it's almost reaching 75% of the country's GDP, the kind of gold which people hold at the current prices. And it's pure currency in a way that it can be easily encashed at any point of time. So gold should definitely be part of the asset allocation, maybe 10 to 15%. Bonds and debt depends on person to person. So I think it's tough to define, but everyone should have at least 1 years of expenditure and some additional amount in fixed income and bonds to take care of your need. If you cannot pull out of, let's say, risky assets, and you at least have that money stored. So I think that much people should have. Then it depends on whether you're conservative or aggressive.
Quite interesting. And, Sandeep, like you're rightly pointing out, that's going to completely depend on, what your preferences, goals, etc., and capacity is. But this investment in gold as well as fixed income that you're advising right now, it's because equities are getting toppish, or it's because both fixed income and gold look attractive?
No, in general, because in any case, I think gold should do well only. And if you see the 29% return which we are seeing is despite the kind of import duty cut which the government did. Otherwise, the rupee returns for this year, without that import duty cut could have been 36, 37%, nearly double that of the Nifty. So each asset has its own cycle, and to that extent, to play that cyclicality, it's always better to have some diversification.
Taken, so gold is expected to do well from here on as well. Let's do a quick chart check as well before we move forward. Kunal, would you still anticipate a solid upside despite that 30% move on gold this year? And what about crude also, if you're tracking that? Because of course today there has been a 2 to 3% dip because of the comments that we got from Saudi Arabia that they're not looking at holding on to that $100 internal target that they'd sent for crude.
So gold specifically, yes, I would be very bullish on the asset class even at current levels. And I think this 30% YTD gain is towards a very meager kind of a price action which happened for gold in the previous year, where it moved, I think, around 12%, 13% from 1900 towards 2000, 2060 plus in terms of dollar denominated prices. And the major chunk of the move which has happened for gold prices has happened in the mid part of this last 8-9 months for this calendar year. And I believe that what we are seeing right now is just a momentum and as well as a follow through inertia for the gold prices. But then the kind of breakouts, the kind of stability the prices have shown after that mid part of the move, I think is one of the major reasons why I would probably believe that there could be lack of volatility and more consistent price uptrend. So I think from current levels of 26.50, 60 approximately on dollar denominated prices, I would probably expect gold to come back towards 26.65, 26 2,700 kind of a mark on those terms.
Okay, that's that. In fact, I don't know if we can bring up that soundbite of Chris Wood as well, because he also made the point that in the very near term, that's the next 6 months, he also finds the gold mining stocks to be most attractive. In fact, we will, play that soundbite up for you in just about a few seconds from now. I think we can cut to it.
I believe the inventory in the top 7 cities is in a multi-year low. So what should happen is that the property recovery should gradually broaden out in terms of it's been led by the high end. Basically, the amount of properties being bought in India is still very low, what we've seen in China at the peak. So I think from right now, I think we should hope that the property cycle can run another 4 years. We're just entered in the fourth year of this upturn. The drivers of this current bull market we've been in have been more in the energy, infrastructure, real estate area, and my guess is that these remain the key drivers of the story. 6 months I would be owning gold mining stocks. Gold has gone up a lot. Energy is at the bottom end of the range. The profit margins of gold mining companies should increase significantly, and so far gold mining stocks have been underperforming gold bullion. Now, my long-term recommendation to anybody listening would be to sell US Treasury bonds. The banks are overdue some outperformance. The banks have also had a bit of a regulatory headwind because the RBI has been quite preemptive in terms of regulatory initiatives in recent months, which in the short term is negative for the banks, but in the long run it should hopefully be positive because it means that the credit cycle should be maintained for longer without disruption. So I'm maintaining banks in my greed and fair India long only portfolio.
That's the latest coming in from Chris Wood. But Sandeep, also wanted your take regarding the disparity of move between the large cap and the small cap. And I'm not talking stock specific right now. Assume you are a mutual fund investor. Would you want to put a lump sum right now into the large cap or the Nifty Bank ETF itself, or would you continue putting your SIPs etc. into the small cap? Are you anticipating a bit of a shift there?
So I would not put lump sum anywhere today. So lump sum is out of the picture given the current move and the valuations. But I think on whoever is doing SIP, there's no reason for them to stop investing on a regular basis, even in small and mid caps. Now the question becomes that whether you are doing it in an index or whether you are doing it in a specific portfolio. So if someone is doing mutual fund SIPs, I think the lower cost option for them, at least small and mid caps, is to do in the index rather than actively managed funds, because most actively managed mid cap funds have not been able to outperform.
Very true. Yeah, that's been very true, at least. While one always, feels like putting it in the mutual fund, it's the index, at least the mid cap and the small cap, which has managed to beat the expectations or managed to outperform any of those individual portfolios. Quick stock of what's happening in the market. Kalyan Jewelers, KFin, Crompton, Saregama, Concord Biotech, these are all in the red. Even First Source, for that matter, is in the red right now. What's in the green is Maruti. What's in the green is Blue Star, Analco, SAIL, NMDC. In fact, metals is the pack, Sandeep. Would you buy afresh in any of the names, or even, let's say, a basket of some of these metal companies?
Typically in metals, what we say is that as the cycle bottoms, as the metal prices bottom, that's the time to buy. But then this time, the dichotomy is so high that many of these metal stocks are actually more near 52-week highs. When today in the papers we read that steel prices are at 4-year lows. So even if there is some small revival in commodity prices, etc., I think it's already built into these stocks. Now, a major reason for the recent move has been the Chinese stimulus. Now, the Chinese stimulus, I think, does more to revive their stock market rather than create any improvement in the real economy. So I would be very surprised if commodity prices move up sharply from current levels, and as such, I would think that for many people who are actually holding commodity stock, this could be a good exit time.
Right. Okay, that's the take coming in on metals right now. In the meantime, just want to revisit that auto theme because autos definitely are charged up ahead. Maruti, M&M, Tata Motors, all looking very smart. You've got metals like we've been flagging off. That's looking very smart indeed. But on the flip side, there's a Cipla, there's Hero MotoCorp, HDFC Bank is flat, ICICI Bank has not done a whole lot today. Reliance, Bharti, these are some of the stories which are still lying quiet. Sandeep, we've often discussed the pharma revival, but does it seem like it may have more legs to go?
So one leg of sharp up move in pharma has already happened, driven by much better than expected delivery of profits, which a majority of the pharma companies gave in the last few quarters. And as such, that's led to the re-rating what we've seen in the recent past. And plus, the input costs were moderate, so that led to margin improvement also. So I think a large part of that, like for a majority of the market, is already in the price now. So from here on, for these stocks to do better, now it will be individual stock-wise movements. But for them to do well, I think we need to see decent sales revival as well as maintenance of margins.
Okay, so time now to take some BTST trades if we haven't done that so far. Naresh, what's the BTST trade?
First is a buy on Ultratech Cement, close to making a new 52-week high, stop loss at 11,800, target price of 12,400. Second is a buy on AB Capital, about to cross the recent swing high, stop loss at 232, target price of 242.
Kunal, what about your BTST trades?
So I'll go with the buy on M&M Finance. That's a chart which is looking attractive, confirming a swing breakout, raising the targets higher, which I had given in the morning. So targets of 350, stop loss could be trailed to 330. And AB Capital is a buy, targets of 250, stop loss could be kept at 228.
Right, okay, Sandeep, Kunal, Naresh, we'll let you all go on that note. Thanks as always for joining in, and what a day this has turned out to be, 26,200 no less, and again, part of a global move. Let me hand it over to Ashesha then for the closing trades.
Well, absolutely. What a day it has been. And we saw the solid rally come in the last half 1 hour or so. Nifty ending 200 points higher, above that 26,200 odd mark. We had Maruti Suzuki top gainer on the Nifty 50 index, up nearly 4.5 to 5% on the back of reports which suggested that Karnataka government could come up with new electric vehicle and hybrid vehicle policy, which would be applicable for the next 5 years. So Maruti Suzuki jump up nearly 4.5% in trade today. Apart from that, Grasim and Tata Motors were some of the other top gainers on the Nifty 50 index. On the losing side though, we had Cipla. A whole host of pharma counters were in focus today, were under pressure. In fact, Nifty Pharma index was down. Cipla sitting with a cut of nearly 1.5%, and Nifty Pharma index was flat, ending the day flat today. ONGC and L&T were some of the other losers on the index today. Bank Nifty meanwhile continued to see that outperformance come in. Nifty Bank index ending the day nearly 200 points higher, 54,274 is where Nifty Bank is ending today. Punjab National Bank up 2%. We had IDFC First Bank, of course, on the back of news that NCLT has approved reverse merger of IDFC First Bank and IDFC. The stock was gaining nearly 1.6% on the back of that. SBI also saw some bit of buying in today's trading session. A couple of newsmakers, we'll talk about Trent, where Citi came out with a note where they initiated coverage with a buy rating. 9,250 is the target price that they have given. The stock up 3% on the back of that. A whole host of metal stocks were in focus today. Nifty Metal Index was up 1.5%. We had Vedanta, which was up nearly 4% after the board informed the exchanges that they will be considering fourth interim dividend for FY25 on the 8th of October. This stock was up nearly 5% today. Apart from that, Nalco, NMDC were some of the other gainers from the Nifty Metal Index. Nifty Auto Index hit an all-time high today, up nearly 1.5%. We had Maruti Suzuki, as I mentioned, up 4.5%. Motherson Sumi and Tata Motors, other gainers from the Auto Index. Bajaj Auto, remember this crossed that 3.5 lakh crore market cap mark for the first time ever. Bajaj Auto up 1.5%. Nifty Realty, meanwhile, was under pressure today. So we had Mahindra Life Spaces, Godrej Properties, Prestige Estates, all of them reeling under pressure. Alchem Labs, meanwhile, down 2.5%. Whole host of pharma stocks were in focus. PB Fintech, meanwhile, down 6 to 7% on the back of news that they will be entering the healthcare business. Bernstein came out with a negative report. This stock was reeling under pressure. It did recover from the lowest point of the day, but nonetheless, it was in focus today. But that's all the time we have on this edition of the show. Don't go anywhere. Stay tuned to ET Now.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.